All right, folks, ready to dive deep. Today we're taking a closer look at Markel Corporation. You might not know them right off the bat, but trust me, their business approach is fascinating, especially their long-term performance. That's something a lot of you have been asking about.
Oh, yeah, they're definitely unique. They've got this mix of insurance, investments, and even a venture capital arm called Markel Ventures. Their track record, especially compared to, say, the S&P 500, it's really something.
So where do we even start? Markel seems like they've got their fingers in a lot of pies.
Well, I'd say their story really kicks off back in 1986. That's when they went public. And their growth since then, it's been phenomenal. Just look at their book value per share. That reflects the company's net worth.
Right, right.
So from 1986 to 2008, that grew at a compound annual rate of 19%.
Wow, 19% for over 2 decades. That's impressive, but what's that look like compared to the rest of the market?
Well, during that same time, the S&P 500 only grew at about 10%.
So basically, Markel was doubling the market's returns. That's not just luck,
Right.
right? What's their secret sauce?
Smart investments definitely play a part, but the real key is their culture. They call it the Markel Style. It's like a set of core values that guides every single decision they make, from underwriting policies to, investing capital.
The Markel style. Hmm. Sounds almost like a fashion statement. What kind of principles are we talking about here?
Think of it as a long-term mindset, decentralized authority, a deep commitment to their people, employees and partners. There's this one quote that really sums them up. They say, "Success is the result of hard work, a zealous pursuit of excellence, commitment to success, and intelligent risk-taking."
So it's not just about profits today. It's about building for the future, creating value over the long haul. But how do they put this philosophy into action, especially in the insurance world? It can be a pretty ruthless business.
Right, and that's where their underwriting discipline comes in. Markel is known for having really strict standards when it comes to underwriting, and they're not afraid to walk away from business if it doesn't meet their criteria, even if it means sacrificing some gains in the short term.
So they're not just chasing every dollar. They're being picky, making sure the risks they take on actually fit with their goals.
Exactly. And the combined ratio is one of the main tools they use to measure their underwriting profitability.
The combined ratio. I know I've heard of it, but to be honest, I could use a refresher. Can you break that down for me and for our listeners?
Sure. In simple terms, the combined ratio tells you how efficient and profitable an insurance company is when it comes to their core insurance operations. You calculate it by adding the loss ratio, which is the percentage of premiums paid out in claims, to the expense ratio, which is the percentage of premiums spent on running the business.
So a lower combined ratio basically means they're keeping more of the money they get from premiums after they pay out claims and cover their costs.
Precisely. And Markle, they aim for a combined ratio below 100%, which means they're making a profit just from their underwriting. And that commitment to this disciplined approach is a big reason for their consistent success.
Makes perfect sense.
Hmm.
But even with great underwriting, unexpected things happen, right? Like, has Markel ever faced big losses? How have they handled those situations?
Oh, yeah, for sure. Even the best underwriters can get hit with unexpected claims. Take asbestos claims, for example, back in the early 2000s.
Asbestos, yeah, that's a classic case of what they call a long tail risk, where the consequences can take years, even decades to show up.
Exactly. And like a lot of insurers back then, Markle, they underestimated just how big the asbestos problem would become. Turned out to be way bigger than anyone thought, and it ended up costing them a lot. They had to set aside a ton of money to cover those losses.
So they had to dip into their reserves. That must have been a blow. Did they ever fully recover?
They did, which really shows their strength and their long-term focus. And the interesting thing is, they actually saw the whole asbestos situation as a learning opportunity.
What did they learn?
It showed them how important it is to have a margin of safety in their reserves, kind of like a cushion to protect against those unexpected losses. It proved that even the most careful risk assessments can be wrong, and having that extra buffer is crucial.
Almost like they're building a financial fortress, preparing for those inevitable storms that hit the insurance world.
Perfect analogy. And it's that commitment to prudence and long-term thinking that has helped them navigate some pretty rough seas over the years. Now let's shift gears a bit and talk about another key ingredient in their success, their value investing strategy.
Oh yeah, I've been wanting to get into this. I know they're big on value investing. But what does that actually look like for them?
Their investment philosophy is deeply rooted in the principles of, well, Benjamin Graham. He's often considered the father of value investing. Basically, you're looking for those companies that are undervalued, have solid fundamentals, but maybe the market has overlooked them or, mispriced them.
So they're not after the latest hot stock or trend. They're looking for those hidden gems with the potential for solid returns way down the line.
Exactly. They're not in it for a quick buck. They're looking to partner with companies they believe in and hold those investments for years, maybe even decades.
What do they look for when they're sizing up a potential investment? Any specific criteria?
Typically, they zero in on four main things: profitability, how good the management team is, opportunities for the company to reinvest its earnings and grow, and of course, they want to see reasonable valuations. They're after companies that are consistently making money, have a strong leadership team, have room to grow, and are trading at a price that makes sense.
You mentioned reasonable valuations. That reminds me of something you said earlier, the margin of safety. Can you unpack that a little bit more?
Think of it as a buffer against uncertainty. It's the difference between what they believe a company is really worth based on their analysis and its market price, what the stock is actually trading for.
So they're basically looking for a discount, buying companies for less than they think they're worth, which gives them some protection if things don't go as planned.
Precisely. And that margin of safety is a cornerstone of how they manage risk, both in underwriting and investing.
All this makes sense, but how do they put this philosophy into action? How do they decide how much to invest in a particular company?
Great question. While Markle hasn't come right out and explained their position sizing process, we can get some clues from their overall philosophy and what they've shared publicly.
Okay, I'm intrigued. What clues are we talking about?
Well, their emphasis on that margin of safety suggests they're pretty conservative when it comes to sizing their positions. Remember, that margin of safety is their buffer, so they're not going to go all in on a single investment, no matter how good it looks.
So spreading the risk, diversifying the portfolio.
Exactly. And because they're focused on long-term value creation, they're probably not chasing short-term gains or trying to time the market. They're more likely to take a buy and hold approach and let those investments compound over time.
Makes sense. Patience and discipline seem to be their superpowers, both in underwriting and investing.
Absolutely. And they've also been very successful in allocating their capital, consistently finding good opportunities to put their money to work and get great returns.
Speaking of consistency, we can't wrap up this part without talking about another key to their success, their succession planning. How have they managed to keep things running smoothly as their leadership has changed over the years?
Excellent point. Leadership transitions can be tough, but Markle has been very proactive here. They've built a culture of developing talent internally, promoting from within, and ensuring a smooth handover of leadership.
So they're not just bringing in outsiders to fill big roles, they're grooming their own leaders, people who really get the Markel style and understand the company from the inside out.
Exactly. One great example is the transition from Alan Kirshner to Tom Gaynor and Richie Witt as co-CEOs in 2015. It was carefully planned, making sure everything went smoothly. This kind of planning for succession is so important for any company that wants to stay successful over the long term.
It sounds like they're not just building a business, they're building a legacy based on strong values, discipline, and that commitment to the long view.
Very well said. And it's that foundation that has allowed them to achieve such remarkable success and, weather some pretty tough storms along the way.
It's an inspiring story for sure, and we're just getting started. I'm really looking forward to diving even deeper in the next part.
Welcome back. We're continuing our deep dive into Markel Corporation. Last time, we were talking about their journey since going public in 1986, their impressive growth, unique culture, and that disciplined approach they take to both underwriting and investing.
Yeah, it's been a fascinating look so far. We've learned about the Markel style, their focus on that combined ratio, and how they learned from setbacks, like, those asbestos claims. What else is there to uncover about Markel? What do we got in store for this part?
Well, last time, we touched on their value investing strategy, how they search for those undervalued companies with, solid fundamentals. But there's more to their investments than just picking stocks. They've also got Markel Ventures.
Markel Ventures. Now that sounds interesting. Tell me more. What is this venture capital arm all about? What kind of businesses are they investing in? Is it a totally separate thing from their insurance operations?
It's definitely a different animal, but those core Markle-style principles, they still apply. Markle Ventures is all about diversification and opportunity. It lets them take that long-term, value-focused approach and apply it to a wider range of businesses. Stuff outside of the traditional insurance world.
So, like expanding their horizons, exploring new areas, but sticking to what they know works.
Mm,
What are some of the businesses they've invested in? I bet it's a pretty eclectic mix.
you're not wrong. It's a fascinating group of companies. They've invested in Cottrell, which makes car hauling trailers. Then there's Ellicott Dredges. They dredge rivers and harbors. They've even got AMF Bakery Systems, which makes baking equipment.
Wow, from heavy machinery to baking equipment, talk about a diverse portfolio. So Markel Ventures, it's more than just a side project, right? It seems like it plays a strategic role in their overall plan.
Absolutely. Markel Ventures is a key part of their capital allocation strategy. It helps them diversify their revenue streams and, not be completely reliant on the insurance market, which can be kind of cyclical.
It's like they're building multiple engines for growth. That's smart. Now let's get back to their core insurance business, specifically that underwriting culture we talked about. I'm curious to learn more about how they actually use the combined ratio when they're making decisions.
The combined ratio, that's at the heart of their underwriting discipline. It's a key indicator for them, showing the profitability and efficiency of their core insurance operations. Remember, a combined ratio under 100%, that means they're making money from their underwriting.
Right. Assign they're pricing their policies well and managing expenses effectively. But in the insurance world, you never know what's going to happen, right? Unexpected events can throw a wrench in the best laid plans. How does Markel deal with those big unforeseen losses? Those times when the combined ratio might go above 100%? Have there been any times where things really went south? And if so, how did they recover?
That's the million-dollar question, isn't it? Even the best underwriters can get hit with major losses. And Markel, they've had their share of challenges.
Oh, I'm sure they have. Tell me about a time when they had to deal with a huge loss, something that really tested them. What happened and what did they take away from it?
Well, one example that stands out is Hurricane Katrina back in 2005. It was one of the most devastating natural disasters in U.S. history, just massive destruction and billions of dollars in insurance losses.
Katrina was a catastrophe, that's for sure. I remember the images, the devastation. It was a terrible time. So how did Markel handle that flood of claims coming in?
They definitely felt the impact. They had a huge surge in claims from policyholders in the affected areas. Their combined ratio for that year took a hit, but they were able to weather the storm, so to speak, thanks to their conservative reserving practices. Remember that margin of safety we talked about?
Yes, that buffer they build into their reserves to cushion against unexpected losses. Almost like they knew a hurricane was coming, even before it did.
Right. Those reserves gave them the ability to absorb the impact of Katrina's claims without putting their financial stability at risk. They were able to pay out claims quickly and fairly, which helped their policyholders get back on their feet.
Impressive. They didn't just talk about supporting their policyholders, they actually did it when it really mattered. That says a lot about their commitment to integrity and that long-term vision.
Absolutely. It really highlights how important that margin of safety is. It's not just about being cautious, it's about being ready for those unexpected events, those things no one sees coming that can really shake up an entire industry.
It makes me think of another event that put a lot of companies to the test, the 2008 financial crisis. It was a time of so much turmoil and uncertainty, a global financial earthquake that brought down some big names. How did Markel navigate that?
They did what they do best. They showed their resilience and stuck to their principles. No panicking, no rash decisions. They kept to their disciplined underwriting standards, stuck with their long-term investment approach, and relied on their strong financial position to get through it.
Like a financial fortress,
Yeah,
able to withstand even the biggest shocks.
precisely. And they came out of that crisis in a strong position, ready to grab new opportunities as the market started to recover.
It's clear that Markel knows how to handle tough times. They seem to have this ability to adjust and thrive no matter what obstacles they face.
You're right. Their adaptability is a testament to their culture, their commitment to always learning and improving. They're not afraid to embrace change, try new things, and adjust their strategies as needed.
It's like they have a growth mindset, always looking for ways to get better, even when things are good.
Exactly. And that brings us to another big moment in their history, the COVID-19 pandemic. That was a global crisis, disrupting businesses and life in general all over the world.
The pandemic, it feels like we're still dealing with the fallout from that. It was unlike anything we'd ever seen before. How did Markel handle that?
Well, they showed their resilience and adaptability once again. They shifted to remote work quickly, put safety measures in place to protect their employees, and found ways to keep serving them as stores. They also recognized that the pandemic was creating new risks and new opportunities, and they responded.
That makes sense. A crisis can accelerate trends and force companies to adapt faster. What were some of the things they did specifically in response to the pandemic?
One example is how they reacted to the huge increase in demand for cyber insurance. With more people working from home and businesses relying more on technology, the risk of cyber attacks went way up.
Right. Cybercrime was already a problem, but the pandemic really made it worse. Hackers were looking to exploit those weaknesses in remote work setups and digital infrastructure.
Exactly. Markel saw this happening and quickly expanded their cyber insurance offerings, which gave businesses and individuals that much needed protection against this growing threat.
So, they saw a need and they met it, adapted their business to meet the changing demands of the market. Another example of their agility and focus on serving their customers.
It also shows their ability to spot new opportunities and make the most of them, even in the middle of a crisis.
Like they've got this radar for sensing shifts in the landscape and adjusting their course.
That's a great way to put it. They're not just reacting, they're anticipating, thinking ahead, and positioning themselves to capitalize on those trends as they emerge.
Now, we've talked a lot about Markel's focus on the long term, their patience and discipline. But how have they managed to maintain that consistency over so many years? Changes in leadership, market swings, economic downturns, those can all disrupt even the strongest cultures. So how has Markel managed to stay true to their core values and their long-term vision through all the ups and downs?
That's where that legendary Markel style really shines. It's more than just rules or guidelines. It's part of who they are. It's how they hire, how they train, how they make decisions. It's what holds everything together, even during times of change and uncertainty.
So it's not just something they talk about, it's woven into the fabric of the company. But cultures evolve, right? How have they kept the Markel style relevant as the world around them has changed?
They've been very deliberate about holding on to their core values while adapting to new challenges and opportunities. For example, they've invested a lot in technology and innovation, embracing new ways to serve their customers and make their operations more efficient. But they've done it without compromising their commitment to underwriting discipline, long-term thinking, and building strong relationships.
It's like they're constantly balancing tradition and innovation, finding ways to evolve without losing sight of what makes them unique. A tricky balance, but they seem to be pulling it off. Now, let's circle back to their leadership. We talked earlier about their transition to co-CEOs back in 2015, but leadership changes can be tricky, even for well-prepared companies. What's Markel's approach to succession planning? How do they ensure a smooth transition of power and make sure their winning formula continues?
They've been incredibly thoughtful and proactive in this area. They've fostered a culture of internal talent development, promoting from within and ensuring a smooth leadership transition. This has helped to keep their culture and strategy consistent over time.
So, no bringing in outsiders for those key positions. They're growing their own leaders, people who are immersed in the Markel style and understand the company's DNA.
Exactly. A prime example is that transition from Alan Kirshner to Tom Gaynor and Richie Witt as co-CEOs in 2015. It was a carefully planned transition, seamless handover of responsibilities. This kind of thoughtful succession planning is crucial for any company that wants to maintain its success for the long haul.
Absolutely. Having the right people in place to carry the torch, continue the legacy, that's essential. And it seems like Markel has really mastered this, ensuring their unique culture and commitment to long-term value creation endure, even as leadership changes.
It's truly remarkable. We spent a lot of time focused on their past performance, how they've navigated various challenges. But what about the future of Markel? What's on the horizon? What challenges and opportunities are they facing? What trends could impact their business, and how are they preparing for what's next?
Great question. We've seen how well they've adapted to past challenges, but things are always changing. New obstacles are bound to come up.
For sure. Like any company, Markel is operating in a constantly changing environment. And one of the biggest trends impacting insurance right now is technology, things like data analytics and artificial intelligence.
Right, tech is shaking things up in pretty much every industry, and insurance is no exception.
So, how is Markel handling this tech revolution? Are they embracing it or clinging to the old ways?
They're definitely embracing it. They've been investing heavily in technology and innovation, realizing it's key to staying competitive and meeting those evolving customer needs. They're using data analytics to improve their underwriting and pricing models, personalize their products, and streamline how they handle claims.
So, they're using technology to improve what they're already good at, refining that underwriting discipline and making their operations more efficient.
You got it. And they're also exploring things like artificial intelligence, looking at ways to automate tasks, improve risk assessment, and maybe even create new products and services.
It's like They're not just reacting to the tech wave, they're riding it, using it to advance their long-term goals and find new avenues for growth. Exactly. But technology isn't without its risks, right? Things like cyber attacks, data breaches, algorithmic bias, these are all things insurance companies have to deal with as they become more tech reliant.
Absolutely, it's a two-way street.
Well,
So what's Markel doing about these tech-related risks?
they're very aware of these risks and taking steps to mitigate them. They've boosted their cybersecurity, invested in data privacy and security measures, and are actively involved in discussions about the ethical implications of AI in insurance.
So they're not just jumping in blindly, they're being thoughtful and responsible, considering both the good and the bad. It's like walking a tightrope, balancing innovation with caution. Now, let's switch gears and talk about another major trend affecting insurance. Climate change. Extreme weather, rising sea levels, changing weather patterns. It's all increasing the frequency and severity of losses. That puts pressure on insurance companies to adapt their models and pricing. So how is Markel handling these climate-related challenges?
They're not ignoring it, that's for sure. Climate change is a top priority for Markel. They're actively involved in research and discussions about how climate change is impacting the insurance industry. They're adjusting their underwriting models to account for those changing weather patterns and developing new products and services to address those emerging climate risks. Like, they're exploring ways to ensure renewable energy projects, helping to support that transition to a more sustainable future.
That's great to hear. So they're not just reacting to climate change, they're actively seeking solutions and being part of building a more resilient future.
Exactly. And their commitment to sustainability goes beyond just insurance. They've implemented environmentally friendly practices throughout the company, from reducing their carbon footprint to promoting responsible investing.
Okay, so they're putting their money where their mouth is when it comes to sustainability. It's not just talk, it's part of their actions and how they invest.
Right. They see sustainability as a crucial part of their long-term vision, a way to create value for everyone involved while contributing to a healthier planet.
We've covered a lot in this deep dive. We've journeyed through Markel's history, explored their unique approach to business, and looked ahead to see how they're navigating the changing landscape.
Yeah.
But before we wrap up part two, I want to bring it back to you, our listener. What are some of the key takeaways from Markel's story? What lessons can you apply to your own life or career?
That's what's so great about Markel's story. It's not just about financial success, it's about the power of those timeless principles: patience, discipline, integrity, and a focus on the fundamentals. Those are values we can all apply in our own lives, no matter what we do.
I love that. So it's not just about the numbers, it's about the mindset, the approach, the values that drive success. It's a good reminder that success doesn't happen overnight. It's the result of consistent effort, smart decisions, and sticking to your values even when it's tough.
Couldn't have said it better myself. Now, before we head to part three, where we'll wrap up our exploration of Markel and share some final thoughts, I want to leave you with this. Think about a challenge you're facing right now, in your life or your career. How could you use some of Markel's principles, patience, discipline, long-term thinking, to approach that challenge in a new way?
That's a good question to think about. And while you're doing that, we'll be back in part three for our final analysis of Markel's journey. And we're back. Welcome to the final part of our deep dive into Markel Corporation. We've been through their history, their culture, those unique strategies, and of course, we've seen how they've tackled challenges and consistently created value over the long haul.
It's been quite a journey, uncovering what makes them tick. We've seen how they've handled major events like Hurricane Katrina, the 2008 financial crisis, and even the COVID-19 pandemic. And through it all, they've kept that commitment to long-term value creation.
Yeah, they've really set a high standard for what it means to be a resilient and adaptable business. But as we wrap up, I want to step back and think about what this all means for our listeners. What are the big takeaways from Markel's story? What can we learn from them and apply to our own lives, even if we're not in the insurance or investment world?
That's the key, right? We're not just here to dissect companies for fun. We're looking for those timeless principles, those bits of wisdom that we can all use no matter what we do or where we come from.
So what are some of those key takeaways, those lasting lessons we can take from Markel's journey?
Well, one of the most impressive things about Markel is how committed they are to their core values, the Markel style. It's not just the saying, it's how they operate, how they make decisions, and it's a big reason for their success.
We've talked a lot about the Markel style throughout this deep dive, but can you give us a quick recap of those key principles that make it so effective?
Of course, it's all about taking the long view, decentralizing authority, building strong relationships, and having integrity and striving for excellence in everything they do. They give their employees the power to make decisions, they trust their partners, and they always try to do the right thing, even when it's tough.
It's refreshing to see that, especially in a world that often seems focused on the short term and quick wins.
Exactly. And you can see that long-term focus in their investment approach, too. They're not chasing fads or hot stocks. They're looking for solid companies with strong fundamentals that they can hold on to for the long haul, maybe even decades.
It's like they're playing a different game than a lot of other investors. Not trying to time the market, but finding those companies that are built to last, those that are creating real value and are set up for long-term growth.
You got it. And that patience and discipline has definitely paid off. Just look at their track record. But it's not just about the numbers, it's about the approach, the mindset, the willingness to stick to their guns even when things get rocky in the market.
It reminds us that sometimes the best strategy is to just do the right things consistently. Focus on the fundamentals and trust that the results will come over time.
Right. And that's something we can all apply to our own lives, whether we're managing our own money, building a business, or building a career.
It's about having a clear vision, setting long-term goals, and making those everyday choices that get you there,
Hmm.
even when it's tempting to take shortcuts or, chase those distractions.
Well said. Another important takeaway from Markle is their willingness to embrace change and adapt to challenges. Look how they've navigated big events like Hurricane Katrina, the 2008 financial crisis, and the COVID-19 pandemic. They didn't freak out or cling to outdated strategies. They adapted, they innovated, and they came out of those challenges even stronger.
It shows how flexible they are, how they learn from experience, and how they're willing to change as the world changes around them. It's a good reminder that we can't just sit around and wait for the future. We have to help shape it, grab those opportunities for growth, and, really transform ourselves.
Absolutely. And that leads to another big lesson, the importance of a strong, resilient foundation. Markle has built a fortress, financially speaking. They've got conservative underwriting practices, a disciplined investment approach, and a solid balance sheet.
It's like they've got this shield to protect them from the inevitable ups and downs that every industry faces.
Great analogy. And it reminds us that we can all build our own fortresses in both our personal and professional lives. Make those smart choices, manage those risks, and create that buffer to help us weather those unexpected storms.
And I think one of the most inspiring things about Markel is their commitment to building a legacy. They're not just focused on profits today. They're building something they hope will last, something that will continue to benefit their stakeholders, employees, and the community for years to come.
It's a great goal, and it reminds us that success isn't just about what we achieve in our own lifetime. It's about the impact we have on the world, the legacy we leave behind.
It's about inspiring others, creating something bigger than ourselves, and leaving the world a little better than we found it.
Couldn't put it better myself.
Well, I think we've reached the end of our deep dive into Markel Corporation. We've looked at their history, their culture, their strategies, and that remarkable ability to overcome challenges and build lasting value.
It's been an incredible journey, and I hope our listeners have gotten as much out of it as we have.
I'm sure they have. Markel's story shows the power of those timeless principles. It's a reminder that success is a journey, not a destination. And it's an inspiration to all of us to strive for excellence, to build something that matters, and to leave a positive mark on the world.
Well said. And with that, we'll say goodbye to our listeners and encourage them to keep exploring, keep learning, and keep building their own legacies.
Until next time, keep diving deep and keep searching for those hidden gems of knowledge and inspiration.